This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Morning, guys.
Morning.
Hi, good morning. So yesterday's Rakhi celebrations done, and today it's a penultimate day. Tomorrow's the weekend.
Well, tomorrow's Friday. Right?
Tomorrow's the
Friday,
the last day.
Yeah. No, I was so lost in the Rakhi celebrations. I was saying I'm looking forward to the salary today.
Lots of things to look forward to then,
Absolutely.
perhaps.
Well,
What
did
are
you
you
guys see
looking
the moon yesterday, by the way? Yesterday evening?
I
It
missed
was a blue moon. It was not blue. I mean, I was like, oh, it was big. It was closer to the Earth than I think it'll be this year. And apparently there was Saturn, which you could spot next to it as well. I've been asking people whether did anybody spot Saturn, but you need a small telescope for it.
Apparently, because of the blue moon, moods, there's a lot of fluctuation that happens in moods, and so beware.
Is that a warning?
Well, you guys beware, since I am the one who
saw the moon.
Okay, well, let's just quickly take a look at, the trade setup, right? I mean, how are things looking? For the market, for almost, 3 days now, it's been neither here nor there. It's flattish. Yesterday was no different. Actually, yesterday was two halves, very different. First half was kind of strongish, but the second half, starting about 1:30 p.m., the market sold off and we ended absolutely flat. On the Nifty, actually on the Bank Nifty, we ended over 0.5% lower. So the underperformance in banks is back again. It was fleeting outperformance for about 4-5 days last week, but the underperformance there is back. So, but indecisive, flat is what we have. U.S. markets, they had another up day. I mean, actually, for the NASDAQ, it is the 7th day of gains in the last 8. The index was up 0.5%. The S&P was up about 1/3%. Actually, U.S. indices were up a little bit more, but they gave up gains. So we had the second revision to U.S. second quarter GDP numbers, and it was a downward revision. Actually, across growth, inflation estimates within the GDP number, it was a downward kind of revision that we saw. So that kind of sparked a dovish reaction across U.S. assets, but it was short-lived, and that's why the pullback happened later. The 10-year yield actually ended flattish, 1 basis point change, but lower. The dollar index is down another 0.4% nearly to 103.13. So this is, a far cry from the 104-ish, 104.5 kind of levels, which it was knocking on, which is good news. The only niggle is that oil prices are continuing to move up slowly but steadily, 0.5%, 0.75%, but it's now nearly about $86 a barrel. So one needs to keep an eye out on that. By the way, the sort of, at least since Jackson Hole, the divergence has become even more between what the US is doing and what India is doing. So for the NASDAQ, it's up 4% since the Jackson Hole speech, Powell's speech, and the Nifty is absolutely flat, 0.4%, right? So it's pretty stark. Now, let's just come to the market here in India. The Nifty is, I think we just need to watch and wait and watch for the Nifty to take out the 20-day moving average, which stands at 19,433 now. By the way, yesterday's high was 19,452-ish, which is exactly the 20-day. So it hit the 20-day at some point in the day. Actually, it hit it at around 11:30 in the morning, which was the day's high. And then it did nothing. Starting 1:30, it came off quite sharply, as I mentioned earlier. So the 20-day now has moved a little lower once again to about 19,433, and that's the first level I think the Nifty needs to cross and then close above. Support comes in at about 19,210. That's basically, the lows of 3rd of August, I think 14th, and then 16th of August is a downward sloping line. The support line that is 19,210. You can use that as a bit of a support. Well, Bank Nifty has failed to close above its 40-day exponential moving average for 3 days in a row. And yesterday, of course, was a complete failure. So it was a sharply low, not sharply, but it was a meaningfully lower close. Resistance for the Bank Nifty is exactly that, which is the 40-day exponential moving average, which stands at 44,544. And support comes in at the recent low, the 25th of August low, which was a big candle, which is 43,983. So, the market's not giving you any signs that it wants to do anything meaningful. So I think we were saying on Monday that maybe with the Jackson Hole behind, perhaps things are getting a little clearer, but that's not the case. So we just need to clear some of these levels out, and they're not very far away. So better to wait, watch. If you're taking or trading positions, go small. And always, as we've been mentioning, better to take those positions on the long side on dips and not try and look at the opening levels to do anything at all. Mid caps and small caps, of course, I mean, you know, as the line suggests, the party continues. No problems there. Mid cap index 3/4 and small cap index yesterday up about 1.25% or so. And those are individual stocks which come into play. We'll talk more about that. Sonia.
Absolutely, you know, and there was selling in the last 1 hour of trade, right? If you look at it, in the last 1 hour, the Nifty sort of came off. It just goes to show that this continues to be a little bit of a sell-on rally market, and the Nifty failing to hold on to 19,400. That's the crucial level. I mean, we've been watching out for, you know, the 20 DMA, the 50 DMA, all of that around this 19,400 to 19,450 zone, and the Nifty just unable to hold on to those levels. Having said all of that, the gains on Wall Street have been pretty good. It's been 4 straight days of gains now that we've seen. But for our own markets, as we said, it's been so very range-bound. The bigger problem really is in the Bank Nifty. So if you look at what's been happening in this series, right, the Bank Nifty in the last 1 month has lost about 3%. Although yesterday, FIIs sold about 500 crores in the cash markets, while DIIs bought about 1,300 crores. If you look at the series so far, it's been a weak series, right, August. The Nifty is down 300 points, and this is the first negative F&O series that we've seen since March of this year. So the market mood is definitely not as buoyant as it was in the preceding months. A couple of things to watch out for. You have the India Q1 GDP data that comes out at 5:30 p.m. later today. You have the auto sales for August that come out tomorrow. There's also F&O expiry that is today, and then there's US monthly jobs report tomorrow. So we'll be flooded with a lot of data in the next 24 to 48 hours. But in the meantime, you'd have to say that, you know, this level of the 50 DMA, the 20 DMA around 19,400 to 450 is something that continues to be a stiff resistance for the market. Whether we take it out, time will tell. But for now, there doesn't seem to be any trigger which could suggest that.
Well, that's right. So, you know, India's underperformed this week because you have the global markets. You look at the S&P 500 that's risen for 4 straight days. Well, the Indian markets were underperforming, virtually unmoved. And both, if you compare us with the developed markets as well as the Shanghai index, that's the Chinese index, were underperformers for the week. Now, in terms of trade setup, well, today we have F&O expiry that plays out. And Nifty, well, will be breaking that 4 series winning streak. Remember, we had a good streak between April to July. All the series we ended positive. For this series, we're down close to around 300 points. So unlikely that we go up 300 points today. So we'll have to digest that fact. Rollovers, well, on D-1, that's as of yesterday, for today, they're more or less in line. I'm looking at the Nifty rollovers at around 58, 57% approximately. The market-wide rollovers as well at around 76%, more or less in line with what you've seen in the previous 3 sessions. In terms of flows, watch out for the MSCI rebalance. That will take place in the final hour of trade or so. So we'll have cash market volumes that will spike up. You'll have the F&O expiry as well. So the last hour will be quite volatile and individual stocks will be in focus. What did the FIs do yesterday? Well, they added longs as well as shorts. They continue to remain mildly net short. The problem is they're writing calls aggressively. And yesterday they wrote close to around 20 calls for every 1 put. So aggressive writing is what we have seen. And the 19,400 call, that added close to around 30 lakh shares yesterday. The premium came down from around 56 rupees. It came down to around 20 rupees odd. There was a lot of writing out there. But on the downside, that 19,350 put, well, that gives some kind of hope to the bulls. What are the levels we're looking at? Well, since 19,300 put has the highest open interest, on the downside, you're looking at around 19,280 to 19,300. That's a crucial support zone for the day itself. On the upside, 19,450, we went there yesterday, the 20 DMA, tried to cross that, traded above it for some part of the day, and then we slipped from there. So that's clearly a resistance level that we're looking at. The Nifty Bank, that's the problem pocket. Yesterday, it came off big time. The 100 DMA, it's quite close to that, close to 200 points away from that level. So that's one level I'm going to look at. And if that breaks, you're hoping that the 16th August low that we just visited, 43,600 odd, that holds out. So that's clearly the important, support zones. The GIFT Nifty for starters, well, yesterday it was indicating a big gap up. Unfortunately, we came off the day's high. Today as well, it's suggesting a 35-point gap up. But as we know in the last few days, you need to build onto these gap ups because otherwise it gets sold into.
All right, Nigel. So that's basically all of the things that you need to watch out for as we begin another trading session.
By the way, Prashant, since you saw the blue moon, I read up on it. It said it could either bring out deep feelings of love and support, or it could bring out unresolved issues of yours. So
dear.
you decide which one it is.
I think I'd stick with the former. But if the latter comes out, I mean, you guys be understanding today.
We'll keep our distance.
All right, well, before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Harold van der Linde of HSBC will join in to discuss the global setup. Our research team will get you CNBC TV list of top 10 stocks for the day. At 8:30 this morning, we have Deepan Mehta of Elixir Equities talking to us about what he likes and he'd like to do in the market.
Okay, plenty of stock talk and market talk. First up on the equities front, we have Mahesh Nandurkar of Jefferies, who says that political continuity is the most likely outcome in the upcoming national elections due May 2024, which augurs well for their key thesis of a capex and housing upcycle over the current decade, driving higher GDP growth and attractive market returns. He says the key risk factors would be anti-incumbency, small vote share swings causing a large impact on outcomes, and the 2004 example. He adds, potential market volatility ahead of the election should be used to add domestic cyclicals.
Okay, well, let's get you some money market views now. On the rupee, we have Parul Mittal Sinha Stan C, who says that Forex saw appreciation buys last week, tracking dollar-yuan trends and downward pressure on the USD. For next week, she expects the rupee to trade between 82.5 to 83.1, with MSCI rebalancing related inflows in focus. Adds that non-farm payrolls data on this Friday will be the key driver for USD and yields there.
And on the bonds, Parul Mittal Sinha says domestic yields saw downward pressure last week, tracking global rates. For next week, she expects the Indian benchmark 10-year yield to trade in a range of 7.1 to 7.2 on the basis of the new benchmark. Apart from global rates, the ICRR review on September 8th will also be in focus.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit from now in our special Top 10 segment. But we're looking at Dish TV, BHEL, RVNL, Zen Technologies, Dreamfolk Services, Nazara Tech, Ajanta Pharma, and a whole host of metal stocks as well. Those are stocks on the positive side. On the flip side, you have Sula Vineyards as well as MedPlus Health that are likely to react to the large trades.